Welcome everyone, thanks for joining. I did it. I bought another $1,000 of Alibaba. And I continue to buy this company despite the many opposing opinions. I realize that Alibaba is a polarizing investment. There's many extreme opinions on both sides. Either people are very for Alibaba, thinking it's one of the most deeply discounted, impressive growth stories in the market, or they believe that it's unpredictable, it's controlled by the Chinese government, and it's a fool's errand to be investing in this company. And right now, the people that are predicting that it's a fool's errand to be investing in this company are feeling pretty good about themselves right now. They are being proven right as of right now. But despite that, despite the fact that right now Alibaba stock continues to fall every single week, every month, it just continues to go down lower and lower, I continue to find this company more attractive. I continue to find the risk associated with this stock lower and lower as the price drops. And so I'm buying more of this company. Now, in this video, I want to do an updated opinion on this stock. I want to address some of the concerns, like all the various concerns that we have right now, all the news about the VIE structure, the unpredictability of the government, everything going on with this investment. I want to take a holistic look at it, a holistic approach at it. We're also going to be looking at one person's opinion that I respect, Ray Dalio, on China and the Chinese government and capitalism and communism. He gives us his opinion, which I think is a much more informed and level-headed opinion than the mainstream US media. So we'll be looking at Ray Dalio's opinion on China, as well as my overall updated opinion on Alibaba. Now, as always, we have to give a quick update on my portfolio. This is a real portfolio with roughly $100,000 in it. And we're going to give an update on how this is performing against the S&P 500. If you're new to the channel, I track this every single week and we take a look and see if I'm outperforming or underperforming the market, the S&P 500. I invest in a lot of growth companies that I think have good balance sheets. They have good growth opportunities. I think they have stable, resilient income. And I believe that they'll grow their earnings much faster than SPY. And these companies will be much more valuable and they'll grow at a faster rate than the rest of the market. So the hope is here, and the goal is to comfortably outperform the S&P 500 over a 5-year timeline. Right now, we're about a year into it, and as of an hour ago, when I updated this, we're basically matched with the S&P 500. We're 0.5% above it. So not amazing, but not terrible. The Story Fund has returned 16% time-weighted returns, while the S&P 500 has returned 15.53. So both of them are roughly the same. It really has not been enough time to see if I pull away for a prolonged period of time, or if I keep matching the S&P 500. I believe that over time I'll outperform SPY. I think over the next couple of years, the differences will be more noticeable with the companies that I'm investing in and the rest of the market. But as of right now, it's a close race. Now, looking at Alibaba specifically, let's talk about this company. It has gone down in value over and over and over again. It continues to just fall in value. In fact, if we look at the stock price here, this is the chart. Look at this. It's down nearly 53% from its all-time highs. That is an incredible drop. It's trading at $148 a share today. When I put $1,000 in just a couple days ago, it was at $150. So we're down $2 from that latest $1,000 purchase. I feel very comfortable and very good about this purchase. I think that right now, looking back, if we look back on Alibaba as an investment, we'll look back and view it as very cheap during this time period. It doesn't sound like it now. I know with all the news and the concerns surrounding China that right now Alibaba feels scary. It feels intimidating. It feels uncertain. And as investors, you crave certainty. But I truly believe that over the next 5 years, this will be one of those cases where we can't believe how cheap Alibaba traded back in 2021. That was a unique time to buy the company, and investors that took advantage of that were greatly rewarded. So that's what I'm trying to do in this situation. Controversy is not new to companies. Scandals is not new to companies. Having government regulation and fears surrounding that is not new to companies. And having great companies that have moats, they might even have monopolies. They're incredibly fast-growing companies. They're powerful companies. They're almost unstoppable, but yet they still trade way down from their intrinsic value for a long period of time is not new. None of this is new. It happens all the time. I can give the example of Facebook. Back in 2018, Facebook traded down 40% from its peak. This is back in 2018, all the way down to $132 a share. Let's go back and look at that. That was in 2018. It traded down to $131 a share, and it even got as low as $124 at one point. This was during the whole scandal of the Cambridge Analytica scandal. Do you remember that? If you go back to 2018, do you remember the Cambridge Analytica scandal? I think it was some like app or something on Facebook that did surveys and gathered a bunch of people's information, and then they sold it to different political affiliates or something like that. I don't know. Don't quote me on that. But it was some scandal that at the time was very important, very scary. Investors became very intimidated about the story of Facebook. And as a result, investors sold 40% of the company, traded down to $132. Facebook stands right now at $341 a share. So what, 4 years later, it's over doubled. In fact, it's gone up quite a bit since then. If we bought it during the low, it's up 156% today. So that's a pretty good gain over the past 4 years. The point being that now it looks almost comical that Facebook would sell down 40% because of Cambridge Analytica, but at the time, when all that news was being broadcasted, when there was the Wall Street Journal and Bloomberg and Seeking Alpha and investors on Reddit talking about the Facebook Cambridge Analytica scandal, that became scary and concerning for investors. In the moment, it never feels good to buy when other people are being fearful. Your natural tendency is to be fearful along with them. Being greedy during these times is very difficult. It's something that you have to go against the grain. You have to control your emotions, look at the actual situation, look at what's actually going on, and determine whether you're buying value at that time point. The investors that did buy during this time point, which I know some hedge funds that went in heavily into Facebook during this specific dip, are heavily rewarded. That's how they outperform the S&P 500 dramatically over the next 3 to 4 years. Now, I realize that Alibaba is not the same company as Facebook, and I know that there will be people that highlight the differences. Facebook is in the US. Facebook isn't a VIE structure, right? It's not controlled by the Chinese government. That's true. They are different, but every time there's a sell-off, every time there's fear, every single time it's different. It's for different reasons. If it was for the same reasons, then it wouldn't be scary. If there was certainty to it, it wouldn't be scary. What makes it scary and makes it so that investors sell out is the uncertainty and fear surrounding it. That's what Alibaba has right now. It has fear, it has uncertainty, and looking back, Facebook had the same thing. But over time, that can change, and I believe it will change with Alibaba. Like I highlighted, Alibaba has dropped 53% from its all-time highs late 2020. So a year ago, this company was trading at $309 a share, and now it's trading at $148 a share. So it's fallen by half. It's half the price it was late 2020. Also, keep in mind that Alibaba is now trading at the same share price that it was back in 2017. So way back in 2017, you could buy this company for the exact same price it's trading for today. Now, just to give some context and the differences between Alibaba in 2017 and Alibaba now, with the exact same stock price, Alibaba in 2017 revenued $23 billion. That was the total revenue in 2017. In 2020, it was $109 billion. Alibaba's revenue has gone up roughly 5 times, and the company's trading at the exact same price it was when it was 5 times lower revenue. Either investors were incredibly wrong back in 2017, and they're way overpaying for the company. They weren't discounting the threat of the Chinese government enough, and they're correcting that wrong pricing now by pricing it more appropriately now, or investors are being incorrect right now, pricing the company with a lot of fear and uncertainty that doesn't accurately represent the situation. My argument is that investors were correct in 2017. I think the company was priced fine, and I think that they're incredibly incorrect right now. I think they're pricing it with far too much of a discount, even for the Chinese government. Alibaba is a vastly stronger, superior company now than it was in 2017. Back in 2018, the second quarter of 2018, so not even going back to 2017, they only had annual active customers of 488 million. And I say only because that's a small number compared to what they have currently, which is 828 million. So they've roughly grown the size of their active user base by double since 2017, but the company is the same price. They've grown their revenue 5x, but the company is the same price. You can go with every metric. Every part of their company is growing, that the company's the same price. Their operating income has improved. Their profitability has improved. Their EBITDA growth, their free cash flow growth, their shares outstanding has largely stayed the same. So they're not really diluting investors to attain this growth. It's natural growth from one of the highest quality companies in the market. So the big question with Alibaba remains, how big of a threat is the Chinese government to the overall growth of this company? Is the Chinese government really going to prevent any investors making money from this company? Are they going to completely nationalize it and take all the profits and make it so that investors look like fools investing in this company? That remains the number one question with Alibaba. So let's go ahead and get Ray Dalio's input on the subject. This is an interview he did with Bloomberg where he's asked specifically about China, not Alibaba itself, but he's asked about China and the government, and if the concerns investors are pricing into these stocks are really warranted. Here's his insight on the subject.
Well, you have daughter and son-in-law in Shanghai, and so we get
We're living it in real time.
We're living in real time, and the more you have contact, I think the more you understand it. I don't think it's well understood. For a long time, the question is, how can communism and capitalism coexist? That's the riddle you have to answer, and he had to answer it a while ago. And what do these people want at the top? And what the answer to that riddle was told also by Deng Xiaoping when he was asked. He said, it's glorious to be rich. And then they asked about capitalism, and he says, it doesn't matter if it's a black cat or a white cat, just as long as it catches mice. And so the idea is producing wealth. And so capitalism, yes, but
he says that it's not well understood. So first of all, what the mainstream media does in the US is we have our spin on things. I think anybody here, someone tell me that the mainstream media in the US is completely honest and transparent and just reports the news as unadulterated as possible. I don't believe so. I don't think that they're completely transparent or honest. I think that personal narrative and their kind of underlying ideas and perspectives get put into the news. And so we don't understand really what's going on in China. A lot of times I think we're misled by the media. And I think that Ray Dalio, I think in a nice way, is trying to say that a lot of the times the American media has a negative spin on everything China does because communism. Anything that China does, it'll be negative. Even if it's good or bad, it doesn't matter because the overarching communism theme is wrapped into that news. But here he goes on addressing the assertion that things have changed with China. Over the past year, they went from a half communist country to now full-on socialism and communism.
The redistribution. Okay, so we have four things that are really going on in China, if you understand their intent. Common prosperity is the word now, okay? And it has been the objective to raise money and then to broaden the base of that. Okay, that's
common prosperity is a major goal of China. What does that sound like in the US and Europe? Common prosperity. To me, it sounds like equality. We want to be equal. We want to have more equality. We want the wealth gap to be smaller, right? A lot of the language they use is identical to the West. We have the exact same initiatives and overarching goals. Companies are trying to lower inequality within the US. China wants to do the same thing. They want common prosperity. It's a different way of saying the exact same thing.
Common prosperity. So if you look at their tax rates, they're lower than the United States. If you look at the measures of almost capitalism, they have as much capitalism or more capitalism, much more so than Europe, for example. And
that right there has to be a huge blow to people saying that China is purely socialism, they don't have capitalism. He just said that the tax rates and the level of capitalism exists, they have more capitalism and less government intervention in China than they do in Europe. Let me go back and just play that little segment there again.
Their tax rates, they're lower than the United States. If you look at the measures of almost capitalism, they have as much capitalism or more capitalism, much more so than Europe, for example. And now they're in a prospect to broaden that. So I think there's a tendency, and an understandable tendency, to think because they are Maoist and and communist that they're going to go back to that kind of a thing. And they're not. Deng Xiaoping, Xi Jinping, just, for example, introduced the newest stock market in Beijing. He made a point of being the one who introduced the market in Beijing to the small and medium-sized enterprises. They know that it catches mice. And so the issue is that the capitalist is not in control. The issue is that there's a system for the whole system, and then what they want to do is make sure that it's not a capitalist-driven system. So, and then there's data control, and then you have to understand there's micromanagement. It's like the kids, there's a top-down versus bottom-up. Whether you like it or not, it's what it is.
How can our listeners and our...
He highlights a couple other things, that they're not driven the same way that capitalism is in the US. It's a top-down approach. There's lots of micromanagement, and they have a lot more regulation that steers companies in certain directions. So it's normal for Chinese companies to have members of the government as part of the company that make sure that they're in compliance with everything. Now, he goes on to highlight from a specific investing approach how he would approach these international investments like China.
In other words, China's a strategic play. You're not going to jump in and out. And the amount that you're in should be that which you're comfortable with. It's the same as an investor. It's not smart to sell on the break or buy. It's a strategic play. Most investors are very overweight in the United States or other places. Diversification. There's a competition, a big competition, a war of sorts going on in technology and so on. That diversification, put the amount and the exposure that you want to have there, because you have to have places on some money on two chips, because there are risks in the United States too.
So he highlights that China, these economies, aren't the only place where risk exists. There is risk in the US with our technology firms. There's certain competitors and risks that they face. So have some exposure to China, at least what you're willing to tolerate in terms of exposure. Ray Dalio is one member of extremely intelligent investors that have been around for a long time. They've been through different market cycles. This isn't their first rodeo. He didn't start investing during 2020 when GameStop blew up on SNL. This guy has been around for a long time. He's extremely knowledgeable, and he's not so negative on China like the rest of the mainstream media. This is a common trend. People that I think are incredibly intelligent and have invested for a very long time have a different perspective than most new investors on Reddit and Seeking Alpha and people that have just gotten into it over the past couple of years. I can list off some more examples here. Here is Manish Pabrai's portfolio. He's a very notable investor. He has three main holdings. One of them is Alibaba. He has 21% of his $270 million portfolio invested in Alibaba. I wonder what he thinks with this current sell-off in Alibaba. If he's selling out, if he's changed his opinion, or he's buying more of this company. We can look at another example. Of course, Charlie Munger. He's been outspoken with China, saying that he does not believe that the Chinese government is going to move away from what's been so successful in the past of growing their economy, which is allowing these companies to thrive. He has a very significant holding in Alibaba. He has 17.5% of his portfolio in this company. And he typically buys into companies after a lot of due diligence and with the intention of holding them for a very long time. And Charlie Munger always values safety. He always values having a margin of safety. Charlie Munger is another one, incredibly successful, been in the market for a long time. Everybody knows him, and he's heavily invested in Alibaba. We can look at Thomas Russo. This is another one that's a very conservative investor. He has his main investment, which is Berkshire. Then he has MasterCard, Google, Philip Morris, and then he has Alibaba as a growing investment in his portfolio. Last quarter, he added 30%. It'll be very interesting to see, out of these notable investors, which ones continue to buy more, or if they all sell out. I'll be very interested to see the portfolio updates of people like Thomas Russo, Charlie Munger, Manish Pabrai. I'll be interested to see the opinions of them as these companies trade down. Do you think that they're going to sell out and be fearful, or do you think they're going to add more shares? My opinion is I expect to see a lot more buying of Alibaba from these super investors when we get their next quarterly reports. When we're able to see that, we'll see that they're buying a lot right now. That's what I believe will be happening. So like I said, this is a very polarizing investment. There's people online, even on YouTube channels, that talk about how you're crazy, that you're either ignorant or you don't understand what you own or don't own with the VIE structure, or what you're investing in with the Chinese government being in control in China. And then there's people that I think have more experience. They have a more level-headed approach to looking at China, like Charlie Munger or Tom Russo or Manish Pabrai or Ray Dalio. All of them give their opinions, and it's much more neutral than the mainstream media or many new investors in the market. And I think I'm in better company following these great investors and at least taking their input and seeing their side of it than just following all the fear and uncertainty. When I look at Alibaba, I see a one-of-a-kind company. It is the dominant e-commerce company in China. The tailwinds are tremendous for this company. The only chance of failure with this investment is if they do delist it. I think that that is the one big chance of failure, or if they simply nationalize the business. So if the Chinese government does something that extreme, then I'll admit defeat. I'll say that I'm wrong with this, my assessment was wrong, and I'll lose money on this investment. But until that happens, I'm not too worried about it. I have a business that has grown 5 times as much as in 2017, and it's trading at the exact same price. That is the definition of a value play. That is the definition of a growth play. I have both of them in one stock. So I feel very comfortable holding this company. As far as I'm concerned, nothing has changed with the thesis, only the price. And eventually, prices tend to catch up with the true value of the asset. And I think that that will happen over time. So that's my thoughts on Alibaba. I hope you enjoyed this video. If you did, make sure to subscribe to the channel, and I'll see you next time.